welcome back to the Founder Stage at day 2, 4 years from now. We're moving on to our next session, which is Corporate VC's Compass, navigating the 2026 investment reality. Before we jump into that, I would like to thank one of our sponsors, Guaira Telefónica, for supporting this investor track. And we would like to see the video from our sponsor, please. Guaira has been supporting us throughout the years, so it's a pleasure to count with them 1 year again. So this is it. This conversation is about where smart money is actually landing in 2026, and we will look into what really works, what corporates are prioritizing, and how founders can position themselves strategically. To have this conversation, I would like to welcome on stage our experts today. We have Jorge García Salgado, Investment Manager for DACH region at Guaira Ventures. Jorge, welcome on stage. Ooh. Let's give it up for Jorge. Also, we have Vikram Taneja, Head of AT&T Ventures. Welcome, Vikram. And we have Tamara Steffens, Managing Director at Thomson Reuters Ventures. Tamara, welcome. Thank you for being with us. And I'll be your moderator today. Thank you for joining us. Lovely to have you all here. Could we have a quick spin and introduce yourselves briefly, what you're focusing on in your VCs? Jorge, let's start with you.
Yep, sure. Pleasure to be here today with you. I'm Jorge García, part of Guaira Ventures, leading investments in DACH region. And we're the CVC of Telefónica. We aim to invest in at the frontier of telco, so basically super focused on networks, connectivity, cybersecurity, and AI, both infra and applications. And I think being here at 4 years from now is always great to meet interesting opportunities and catch up with everyone here.
Exactly, like you just said, this is the place to be to discover the new ones and to follow up with the ones who are already over the block, right?
Yeah.
Vikram, over to you.
Sure. Thanks for having us. I look forward to the panel. I'm Vikram Taneja. I lead AT&T Ventures. We invest kind of across the board, but really in 2 categories, I would say, is sort of looking at how we can drive connectivity. There we go.
Speak a little bit low, please.
Sure. Driving connectivity onto our network, that would be the 5G network. Also, we have the largest converged footprint in the US, so fiber as well. Basically, all connectivity is good connectivity. So looking at future drivers of that, in our region. And then we also look at network technologies, ways to make our network faster, more secure, more efficient. Those are all interesting categories for us. And usually we're kind of in the Series A, B stage, but kind of have flexibility around that, but a lot of good opportunities that we've seen.
Fantastic. Thank you very much. And Tamara, what's your case?
Yeah, thanks. Tamara Steffens. Okay, thank you. Tamara Steffens, I lead Thomson Reuters Ventures. We are based in New York City, but we invest globally. We're a 5-year-old fund, and our general market is Series A, but we lean in earlier, and we've done seed and pre-seed. Big areas of focus for us are fintech, legal, and fintech includes a lot in the tax, global tax and trade. We do look at media because of Reuters, and then also risk and fraud, so anti-money laundering, areas of cyber tech, et cetera.
That's 3 slightly different fields, but still I would like us for a warm-up to ask you to share 3 topics, 3 lines with me. What's one theme shaping your strategy in 2026? What's one sector you're leaning into? And what's one red flag that you see that is killing deals immediately these days? One theme, one sector, one red flag. You would like to start?
Sure. Okay, I guess theme inference and its impact on connectivity, right? I think as we see different types of workloads and new use cases for AI, you start to get into things that happen on the network that are different than a traditional smartphone-based network, right? Where you have 20 gigs of data a month for a user that's kind of spread across evenly. Robotics. I'll talk about the sector is probably physical AI is a category we've been looking at quite a bit. And a lot of that is because inference, decisioning that's happening with autonomous vehicles, with connected drones, with robotics, address a new type of demand for data from a bandwidth perspective, from a latency, density perspective. And so that's one that we look at. And it's more because we think there's opportunity there, but also we can architect the network in a more efficient manner. And then I think red flag you mentioned, I would probably say governance or inconsistent governance when we start to screen a deal. A lot of times you see companies that have either outgrown a board or don't have the right board in place, or you can look as even just at OpenAI, right, where something started in the wrong structure and just that problem cascades and gets worse over time if it's not right size. So that's one that we look at and say, hey, if we don't like the initial setup, if it's not going to be cleaned up quick, we avoid it.
All clear. Thank you. Tamara, how about you?
So I'd say sector or theme that we're looking at, obviously just AI in general for us is pretty important. Sector that we're leaning into this year a lot in global tax and trade. Legal tech has always been hot for us. We still love legal tech, but it may be overinvested at the moment. And then red flag for us is, do you own proprietary data that makes your solution better or unique? Because that, I think, is the differentiator in AI.
Thank you. Jorge, how about you?
Super interesting. Yeah, so for us, I would say being an European CVC, definitely the theme of this year would be sovereignty. And it's super interesting to see how like the different approaches to European sovereignty that companies are taking, like not only at the physical layer, but also like the software layer, cloud, data security, all that. So I think definitely that's something super interesting for us, also as a telco. Then regarding a sector, more than sector, yeah, technology, I would say cybersecurity. Because with this AI wave, not only the attack surface is expanding times 1,000, but also the marginal cost of doing a cyber attack right now with the AI tools available today is decreasing way faster than the cost of defending against that, because when you attack, you only need to be right once, and when you defend, you need to be right all the time.
All the time.
So definitely cybersecurity is a super hot topic for us. And then one red flag, probably I would say I'm seeing more and more problems with go-to-market strategy, because right now, with all the AI tools available to grow, I think a clear and structured go-to-market strategy is what makes the difference. Basically, distribution over the product by itself, I would say.
Fantastic. I think we'll address several of these red flags as we advance. And I think that most of our audience today are founders, and the question that most of them are asking is, what are you investing in, and should they, if they take your money, how should they proceed? So probably my first question would be, what have you stopped doing as VCs from last year or 2024, 2025 to this one? What's the tendency today? What's the trend in how you distribute your capital?
Good. I think for us, following with the European focus, I think we are more and more focused on, it doesn't have to be European companies, but they have to have a presence here in Europe, and definitely a go-to-market structure here already. because I think that aligns us way more with the current focus of the business. So yeah, I would say maybe focusing a bit more on the European market for us compared to maybe 2024. Or so.
So you're focusing on Europe because it offers you the security, the legislation compliance, and all of that.
Yeah.
And what happens in the States for you?
As far as what we're not doing this year?
What is the change? What was the shift that you're noticing in the strategy for this year?
Yeah, our strategy actually is very similar to what it's been for the last 4 years, right? Find companies that have a very unique position and where they own the data and the content, right? So we happen to be a company that we obviously create media, right? And we have an agency that we resell that media. And then same thing on the tax side and same thing on the legal side where we have proprietary data sets that allow us to develop products that are very unique. So when we look for investments and partnerships, we're continuing to figure out which companies are actually using data that is differentiating in the market to create a product that somebody else can't copy. So I think we really try to focus on that even more so now. Globally, it's still really important for us to invest so that our products work everywhere in the world. And that's been more of a focus this year as well, is Europe and Southeast Asia in finding good companies there.
Following up on what you're telling us, if you're investing globally and you're focusing on data, is the storage, where they are stored, relevant for you? Do you have a preference? Where the data is stored, where is it?
No, we don't care.
Wonderful.
I mean, I would say again, can you replicate it easily? Because that's where you run into valuation issues when companies just copy other companies, right? So how do you make sure you're finding something that's not already out there?
Okay, thank you. Vikram?
I think a little bit of overlap with what Tamara was saying, but I think in general, as we got into maybe early 2025, you started to see a lot of the AI wrapper companies, right? The ones that were, some vertical built on top of ChatGPT or some other vertical built on top of OpenAI or Llama. And that was interesting, and I think a lot of people just ran to those companies for, to put dollars in because it was, the great new service business, and maybe that was going to disrupt SaaS. To some extent, that's true. I think there's good examples of companies that have built a solid moat around that. But I think what we're also seeing now is that the frontier LLMs have started to take more of a platform approach. I think most of us thought that would happen. We thought that they would start to move into the application layer, start to pick off the low-hanging fruit. I think you only have to look back at the last 4 or 5 months of Anthropic to see what they've done in legal and cybersecurity with COBOL. A number of other categories are there, and OpenAI is going to do the same thing. So when we start looking at deals now that are, the new AI vertical, we really focus a lot on what's the moat that you have. Do you have proprietary data, kind of coming back to Tamara's point? Do you have some kind of unique workflow that is difficult to replicate, that one of the frontier labs can't just come and say, we're going to enter this space? Or is it a very niche, targeted ecosystem? I think even, looking around where we're at right now, we've seen a lot with NVIDIA and GSMA have both announced telco-specific LLMs. And so then the question is that vertical so targeted and niche that, okay, it's probably not something that an OpenAI or one of the others will just kind of move into easily? I don't think anything's really totally defensible, but on some level, you have to ask that question now. And so when we see those deals now, it's not sort of a, hey, let's immediately look at it and try to justify the valuation. There's a lot more rigor that we'll try to put into how is this thing going to protect itself from the big companies or the big players in the next 3 to 4 years.
And say you found this startup that checks all these boxes. When you proceed, what has more weight in your decision? This strategic learning for the corporate, or you're interested in launching it in a fast go-to-market and starting the first sales? What would you prefer?
Yeah, for us, I mean, table stakes for us when we do investments is, does it have some kind of strategic rationale to the broader corporate? Can we bring in either some kind of learning, exposure to a new industry? Is there some kind of strategic dialogue that we want to have to move beyond a commercial relationship? So that's kind of like, it doesn't pass the stage gate into our investment process until we've got that resolved. Now, that said, there's a lot of different approaches and methods. It doesn't mean that we have to have a commercial deal. It could be just we want to learn about an industry, but that's always going to be key, and I think that hasn't changed. The financial part is, as we go through our own investment diligence and kind of decisioning, then absolutely we'll look at it from a financial perspective, from a returns perspective, but the strategic piece is always the main point for us.
Okay. And in Wyra, how do you take this?
Yeah, actually super similar, I would say, to what Vikram just mentioned. For us, the strategic part is super relevant, and basically our aim is not to be in any cap table in which we cannot add any other value other than our financial investment, So, we always try to find some kind of strategic angle with the companies in which we invest, because also that's the way we have to stay relevant for the company.
Of course.
So, and yeah.
It's a win-win.
Yeah, exactly. And on the financial side, obviously, when we do the due diligence, we know what we look for, but it's not like it's exclusive. It's like financial basics have to be there, but the strategic angle needs to build on top.
Mm-hmm. And how invested are you in the follow-up later with these startups? Do you dedicate a team? Do they kind of develop
their own? You mean with portfolio management?
Yes.
and everything? Actually, in Germany we have a venture clienting model. So what we do is, like, once we invest in a company and it becomes our portfolio company, there's a whole team dedicated to basically fostering the business or commercial relationships with our companies, and they are basically in contact all the time with our business units. They know what are the needs and the roadmap basically, and they partner with our startups on
Wonderful.
Continuous basis.
Great news.
Yeah.
Thank you. Tamara, what you would prefer, strategy over sales or vice versa?
We are 99% financial focused. So we won't make the investment unless it looks like a venture return from the beginning. So we look at that first, and then we look at the strategic alliance. But we're not going to invest in things we don't know. So I'm not going to go invest in consumer tech. It's not an area Thomson Reuters is able to help in, and nor can we diligence it. But I will look at things. In fact, I was talking to the two of them before we started about tech. They were like, "Why are you looking at that?" And it definitely fits in the telco space more than it would fit on the surface at Thomson Reuters. But we do, it's kind of in the deep fake area. But we do have Reuters. We do need deep fake technology. But I will invest because it will have financial return. And when I'm certain of that, that's my first. Then we'll move on to see where we can help. If we can't make money on it, we're not investing.
I would like to pick up on that and maybe talk about the success story that happened here at 4 Years From Now that you invested in, and I believe that Jorge did as well. This is Payflow. Could you talk to us about this case, this story?
Yeah, I just actually had breakfast with the founder this morning. A couple of years ago, we met Benoit, who's the CEO of Payflow. They actually do earned wage access, which sits in your HR environment with payroll. So what they do is they will extend money that's already been earned, generally to blue-collar type workers, hourly wage workers, so that if they need what you would consider a payroll loan, but it's actually against earned wages. So you're not charging them these crazy interests to get a couple of days of work hours paid in advance. And we love that. We have a big operation in Brazil. They are strong in Latin America and also Southern Europe. So it's a nice fit for us when they move into the Brazil market. They've been exceptional. And we, of course, invested in them because they were making money. They have 95% recurring revenue, a very profitable business, crazy smart founders. So we can't go to market with them quite yet, but when they enter Brazil, we'll be a great partner for them. But again, financial first, and it's worked out because they're really an exceptional company.
Fantastic. That's a great illustration of how investors and founders can meet at 4 years from now, so don't miss the opportunity. Jorge, what was your take on Payflow?
Yeah, I mean, we are also co-investors with Thomson Reuters, and for us, what we found is that the product market fit of such a solution was huge, because also with the gig economy and everything, this is something super interesting for and conceived as a benefit that employees value a lot. So that's what we saw. That especially for example, in a lot of Latin American countries, this is for them like a super valuable asset to get the money a few days in, and then face all the bills and everything. So yeah, that's what we saw, and then obviously the founders, Benoit and they are amazing. So we are super happy. I didn't personally lead this investment. But they've been in portfolio for, I think, over 4 years now.
4 years now.
So, great investment. Super happy.
Fantastic. Wonderful. I'm glad that this spark happened here. Vikram, over to you. If I'm a pre-Series A founder, what should I ask you when I meet you to find out if you are the right CVC for me?
Got it. I think that maybe the question before where you were asking, strategic, financial, trying to understand that dynamic is important. I think more than anything, I think you want to understand the process that a CVC is going to go through, and everybody's a little bit different. I think you just heard that in the way that they approach it. So, maybe first thing that you'd want to ask is, what they're looking for out of it, right? Just like in your pitch deck, you've got a use of proceeds slide. They've got the same rationale, right? Why are they doing the investment? Are they looking for learnings? Do they want to have some kind of commercial dialogue with you? Try to understand that part of the equation. I think you also want to understand who your business contacts are going to be within the company. So maybe once you've gone beyond the realm of the venture team or the innovation team, where's it going to sit? Is there a product team stood up that you're already working with potentially, or that they're going to connect you with? Is it more in the innovation strategy category, and maybe you're just going to have some ongoing dialogue? But really understanding that part of it is important, I think, when you're working with a corporate. And then just in general, it's understanding their timing, how they think about the commercial relationship. Sometimes corporates need a commercial deal to do an investment. Other times they maybe want to do a trial. Other times they don't need anything. But knowing what their requirements are going to be on the commercial side of the business is going to drive a lot of the timeline for you, and again, also save some frustration in that matter. So maybe some of those are the things I would point to.
Wonderful. Tamara, what's your take?
Yeah, I think understand what you want from them. So I love it when a founder comes up and says, we like what you guys are doing. We need your tax engine to make our product work. And then I try to understand what they're going to do with it, how it would integrate, how we could go to market with them. So I like it when they understand what we have. A lot of people understand our news and our media business. We did a deal with, it's called Agent Smith, and they're very AI-based. Hedge funds use it for investing, right? So it's 5 different agents that tell you how to take a market position, and they need news, right? Daily, every day, what's happening, minute by minute into that feed. And so they understood that, and I was like, oh, this could be amazing for us, right? So coming to us with knowing our assets and what we can offer with you in partnership is a strong way for us to understand go to market, right? Still, we're looking for financial return, but if we can help them, it's even better.
So do your homework, learn about the CVC in question, and come strategically prepared, right? What would you say, Jorge? Do you want to add something?
Yeah, not much to add, I would say. I think what Bikram said, actually, what are the drivers behind every CVC? So that's something, if I was a founder, I would ask first. Not to waste my time as a founder, and to actually understand and be able to build let's say the storyline that aligns with the incentives that the CVC has. Because as I think you've seen, we have different incentives. For example, Tamara is fully financial driven. For AT&T and for Telefonica, it's a combination of that. So understanding that, I think it's crucial. And second, as a founder, to know if the CVC is fit or not for me, I could ask basically like, what's the way of working, and like how do you ensure that the commercial relationship is gonna come after the investment, and then based on that, decide if whether that will work for me as a founder, or I believe it's gonna be like at the end, because basically the timings or the structure or the way of work doesn't adapt to my strategy. So.
Fantastic. I hope you're all taking notes to be able to ask the questions off stage. Moving on, I would like to ask you for an honest response. Say that this is a cheeky part of our conversation. What's underpriced in 2026?
What's underpriced? Okay, I think it's clear for all of us that there's two pricing bars in the market. One is for AI-driven companies. The other one is for non-AI driven companies. So yeah, I could say it's I don't know if it's underpriced because it all depends, but I would say definitely it might be a good timing to invest in healthy SaaS business that grow like 2x year on year, 3x year on year, but are not super AI driven or AI native, if you want to call it that way. I think multiples now there are showing this difference, and if you are specialized in the SaaS market and you know like what to look for, I think it might be a good time to do SaaS investments at super reasonable multiples.
Great. Vikram, what's your take?
I like that answer. Actually, kind of like the nice, normal venture business, not the astronomically priced AI one. But and maybe I'll go within the AI category at least. One of the areas that we've been looking, and I think we just see some gaps, and so maybe as a result of there just not being maybe that presence of company, we start to inherently have a underpriced there. But I would put it kind of in this AI orchestration layer, kind of that control plane that is between agents or physical AI and the actual underlying AI. You think about orchestration, workflow management, policies, identity management, all of that sort of the guts of what would make agentic and or physical AI kind of realized, right? I think we're starting to see some of those opportunities, but I feel like there's still work to do there for us to get to that point where we can actually see those in market. And so, like anything with AI, it's going to come at a multiple, but I still see that it feels like we don't have quite the density of companies in that part of the ecosystem right now.
Thank you, thank you. Tamara, what do you think?
Yeah, I think, the companies where in the last few weeks where, people believe Claude can replace them, they've quickly become, on paper, less valuable, right? If you look at the public markets, so it's the same thing in VC. If you see something that you believe can be, quote unquote, now done by one of the LLMs, I guess the price has come down. I don't know if that's reality yet, so maybe there's an opportunity to find something at the right price that really isn't going to be replaced by just a general Claude command. We'll have to wait and see, though. I mean, unfortunately, you
It's very early.
probably can't roll the dice on that quite yet. You have to kind of see where that's going to play out. And then overpriced, did you ask about overpriced or?
Under.
Underpriced, that's my answer on underpriced.
Fantastic. Before we move on to questions, I'm sure there are quite a few. I would like to ask you to give a short piece of advice for any founder who is interested in collaborating with a CVC. Jorge?
Yeah, sure. I could say, I think I said the first or second question, I mentioned it. Go to market, I think it's key these days. So, yeah, my advice could be dedicate time and build a clear go-to-market strategy, because that will help a lot in actually fostering engagement with the right partners. If the go-to-market adds up, you will be able to find the right partner for each channel, and I think that saves you a lot of time and actually pushes you in the growth direction. Because it's basically leveraging other like third parties' assets in your favor, so you can grow faster. So yeah, I would say
Perfect.
dedicate time to
So if you
go-to-market.
want to work with Wida, work on your go-to-market strategy. Let's move to AT&T.
I have a ton of respect for all the founders in this room. It's such a hard job to get to build out what your dream is. With us, I would say, and maybe even more in general, I think, consider working with corporates. If you're going down that path, just really make sure you know what you want out of it. And then I think there's a lot of value that you can get out of those relationships, from technical diligence, from distribution opportunities, from just access to their resources in terms of the product that you're trying to build in the market you're trying to go after. But just make sure that it's the right partner, right? Do your diligence on them. Make sure that there's a good strategic fit. Going down that path with a company that you're not familiar with or don't know, what their expectations are can just lead to frustration. But I think if you do your homework on it, it can be a very valuable partner and not just bring investment capital, but also a large commercial opportunity for you to grow the actual business.
Fantastic. Research always helps. Thank you. Tamara, what's
Yeah, I would say for us, and for me personally, I love it when a founder knows his financials, like really knows it. Like, what do they have now? What are they going? Where are they going to be in a year? It's not going to be perfect, but have some conviction behind it and know the underlying elements of how you got there, and don't over-exaggerate the TAM. That is probably my pet peeve, is like, really, what is the market you're going after? Where does it fit? Not what the TAM is going to be in 5 years after you change the product and add more to it. What is it right now, and how are you getting there?
fantastic? So now you know, and I think we have time for a couple of brief questions. Can we get a mic in the room? Do we have any? That's your moment. Do we have a question? There's a question. I see the hand over there in the back.
Thank you. So I have a question. Why would anyone invest in SaaS when AI can replicate any software, like the data it's built? Like what's the mode for SaaS companies moving forward?
Could you repeat, please?
Why would anyone invest in SaaS companies when AI, for example, Claude, can replicate the whole company in a day once it's built and it's out in the market?
I think that's exactly the right question, right? And that's why in the public market, SaaS has been crushed. I think why even in the private markets, you're seeing fundraising getting stalled for a lot of those companies. I think the only way that the ones that are operating in that kind of sphere continue to get traction are until they've built up a significant enough data moat that it's not easily replicable by Claude or by OpenAI. Workflows are another one, right? The LLMs don't know proprietary industry knowledge and how certain types of data is interacting with other systems that certain verticals may have access to. So those are the categories. It's got to be a moat on data, it's got to be proprietary data or a workflow, or just very far off the beaten path that it's not on the radar. I don't know that you're going to have industries where you have readily available data repositories or ones that can be bought along with outcomes of that data that you can protect. Because those are the types of industries that AI can just eviscerate at the snap of the fingers. And you're going to see that happen with a lot of them. But I think if you can protect those, the moat around your data and workflows, those are the types of businesses I think that can still succeed.
Would you like to add something, Tamara, Jorge?
No, I agree with that completely.
Thank you.
Yeah.
Do we have another question? Yes, we have one over there. Brief question, brief answer, and then we can maybe take another one.
Hello. Sorry I came late. I really don't.
You just came in for the questions. I saw you come in.
Currently, what's happening is people like Jack Dorsey, for example, are firing humans and replacing with AI. Because investors are looking to see returns. And now there's a bit of a conversation where they're trying to see the rewards. What are your thoughts on firing humans and replacing them with AI and robots to try and make up for earnings and co? Because that's current to where we are now. And I think these are the conversations we should have.
I mean, I think that's happening more in the public market than it is in private market because people do want to see those returns. You are going to have some efficiencies with AI. I think what we see in our own business at Thomson Reuters is kind of the combination of using AI and really smart people. You can be more effective. So I think you will naturally see those efficiencies over time. But yeah, I mean, I think it is evident that AI will replace people. It's very dependent on the industry and the application and where you're, where that will take you, in my opinion.
Yeah. Maybe adding on top of that, obviously it's a problem, so totally get the question. But if you ask me, I think what AI is bringing is not only like this change of jobs, but also like increasing productivity. And once that happens, I believe companies will not keep firing people, but maybe like reskilling or focusing, opening up new departments or new venues for growth. And I think that will create even more jobs. So yeah, in my opinion, reformulating it, it's not about firing people, it's about increasing margins and being able to focus on new growth avenues.
Thank you. Let's take our last question, brief answer, please. We have a question over there.
Thank you. With respect to early stage investments, with the advent of AI, prototyping is cheaper than ever. So your bargaining power has eroded with respect to founders that don't need your money that much. But on the other hand, this prototyping with AI induces technical debt that you can only see on the medium and longer terms. So how do you tackle this erosion of bargaining power towards early stage founder, and how do you challenge the risks associated with technical debt from this developing style?
Yeah, it's a good question. I think, and it's still happening, right? It's early days of this, where you're at a point where cost curves are coming down so far with starting companies. But we had this with cloud. You've gone through these cycles before. I think the offset right now to maybe what you're saying on the prototyping side is that once you start to iterate, if it's something that's actually using one of the frontier models, the token cost is going to offset the savings in general of some of the prototyping to get off the ground. I think what you're also seeing then, at least one thing that we are, I know when I mentioned at the very beginning, we usually do mostly Series A and B, but we've started going earlier into the seed rounds because the A rounds are just getting so much further along, right? To your point, companies they're not just in their prototype in a seed, they're a functioning app by that point because all of it's been built out, right, with AI tools. So you start to see the rounds move into the earlier portion. So maybe valuation is bumped in a seed round, but you're getting your stake that you would have gotten an A round at that point. So it almost shortens the, maybe you're not going to get to a Series D or E type of round. You may only need 2 rounds of funding to get off the ground. And then you kind of see what the technical debt, situation is at that point.
Yeah, and maybe just adding there, what I also see is that now that you were saying, like, AI has commoditized coding, basically, or it's in the process of, I think the question also applies the other way. Like, if that's commoditized, like, why would I want to invest in just one more AI application company that someone else could build, no? So I think the bargaining power is still in, like, do you have these strengths that Bikram was talking about before? Like, do you have the data that makes you not replaceable? Do you have the workflows and the integrations that make you really difficult to replace or take out of the equation? So I think the bargaining power remains there, and that's what you want to pay for.
You want to add something, Tamara?
I think if a founder doesn't need money, don't take it. Why would you bother? If you can write a product and not take anybody's money and find a way to exit without that, yay for that founder.
Yay for that founder. I think it's a great note to conclude this discussion on. Thank you very much, Tamara, Vikram, and Jorge. Let's give them a round of applause. Thank you for the tips, for the inspiration. And if you have more questions, you can always ask them right off stage. And to close, I would like to thank Waira again for supporting the investor track. And we will move on to our next session. Thank you very much.